So there's no question at all that this current real estate market will not last forever. So what are you doing to prepare yourself for 6, 12, or even 18 months if you're looking to buy or sell real estate? If you want to know our honest opinion, then make sure you stay tuned because you do not want to miss this market update. What's up, guys? My name is Shawn Connors.
Steve Seymour with Vanguard Realty Alliance.
And today we're going to talk about what is going on in the current market and then a little bit about our forecasting for what's going to happen within the next 12 months. So, Steve, what are some of the things that you're seeing right now in regards to home prices?
Well, first of all, I want to say I'm talking very locally, which is Chester County. We're in Westchester, PA. But in terms of the counties around here, we're still seeing the same thing we've been seeing for months now, which is very low inventory, rise in sale prices, and multiple offers on almost every house that's, if it's listed right, and it's a desirable area, the house is getting like multiple offers.
Right. So, and how long would you say that this could last? Because in my opinion, I don't think something like this can last too long because it seems very unsustainable.
Well, we've had this for a couple years now, really, where it's been a strong market with low inventory and multiple offers. I thought it would get worse with the pandemic, meaning like I thought things would shift, and I was wrong. So I really don't want to claim to have the answers because I've been wrong in the past. But I can say just from watching the numbers, it looks like this is not going to go away anytime soon. There's really no affordable housing being built in the area. So strictly from a supply and demand standpoint, I don't see something that's going to greatly tip the scales to drastically increase the inventory or drastically reduce the demand from the buyers. That makes sense. We'll talk a little bit about unemployment. That could affect the buyers and interest rates could, but it doesn't look like unemployment's going to land nearly as high as people had initially thought. Potentially with the pandemic, it's not. I mean, it's not great, but it's not as terrible. It
peaked at one point. Now it's going down. We're around 8%. But what I think personally, as far as home prices, is I think they're going to continue to rise from now until the end of the year through 2021 too. I can't say specifically when they'll start to come down a little bit, but I'm seeing houses come on the market where, and specifically in Downingtown borough, I just saw one come on the market for $275,000. It's actually coming soon. I sold almost an identical. It's actually the identical house, maybe not as nice. I sold it for in April for $245,000.
Yeah.
So people are trying to get $30,000 more than what it just sold for in April, and someone is probably going to pay that. That's what's crazy.
There's a lot of motivated buyers right now.
I know.
They want to take advantage of the interest rates. They want to get somewhere to live, and they haven't been able to find something over the past year, and now they're thinking, after the pandemic, there's got to be a shift in the market, and it's not. It's actually worse. So, if you were having a hard time looking last year, it's even harder now. The good news is if you're looking to sell and you don't need to buy around here, it could be an opportune time to take advantage of the market.
Yeah, I agree. And a lot of the sellers that we're working with, they have been in really good positions and really good situations where they didn't need to buy immediately, so they were actually able to wait for the right house to come up.
Yeah.
Some of them are, they're relocating to a different area. So again, in Chester County, we're seeing an extreme seller's market. I would say even greater Philadelphia, right?
Yeah. I think, I've heard this from multiple people. I don't know how much true data is around it, but watching moving patterns, I think there is the potential of another suburban sprawl starting, which who knows how long it will go for, but an influx from to the suburbs and people leaving the city. So I don't know exactly what's driving it, but from what I understand, most of it's around the flexibility with people working from home. With COVID, they're now
and they want more space.
Yeah, they want more space. A lot of
people want way more space than what they have in the city.
So, I think there's multiple factors at play, but we're definitely seeing, New York buyers, people coming from out of the area. We're seeing, just people moving further out in the suburbs because they know even if they have to commute to work, maybe it's only 1 or 2 days a week versus 5. The commute's not as important.
Makes it a lot easier, right?
So the suburbs happen to be really going up right now.
Yeah.
And, we happen to be in that market, so it's definitely beneficial for our current environment.
Absolutely. And what about what you're seeing on the foreclosure side and the forbearance side?
I haven't been watching it too closely, so what I have seen is a lot of people out there saying that foreclosures will uptick, but I haven't been watching the actual local
They're actually
data.
not at all. There's literally like 5. I checked in Chester County last night. There was 5 REOs.
Yeah, there's
5.
That's
not crazy.
Yeah, we haven't seen them yet. Now I will say it's possible we could see more, but I don't think there's going to be this big wave of foreclosure.
Yeah.
If and it's going to depend on how this winter is, but there are small businesses that are struggling. We don't want to deny that, so there could be potential foreclosures and job layoffs where people are not able to pay their mortgage and the forbearance runs out.
Right.
That is a possibility. I don't want to be blind to it, but we're not seeing it, at least not yet.
Right. And one thing that I have been researching and looking into is the fact that there won't be that many foreclosures because a lot of these homes have a good amount of equity in them. So they're not going to be forced to turn it back over to the bank, and the bank's going to be more willing to want to work with them. And then if they have to sell it, okay, then they have to sell it. Maybe downsize into a rental, move into a smaller home, but they still have so much equity that they can actually make out from it.
Yeah. So unless they're moving to a different market, and your house, like in terms of affordability,
right.
If you try to sell your house around here, everything has gone up.
Mm-hmm.
So it's really like a hard position to be in, and you start looking at what you could rent something for. So I think a lot of people will do what they can to stay where they're at because it's there's just no for new construction, the cost of construction is going up too rapidly.
That was definitely something I wanted to ask.
The new construction, if a builder wants to build an affordable house in the Westchester area, I mean, just the land alone could be a $200,000 lot, and
right.
If you're building I'm talking about a single family, you have to probably build a $700,000 house for a builder to really have it be worth their time and energy to find a lot, locate a lot, go through all the subdivision approvals, all that.
Absolutely.
And on terms of townhouses, you see carriage homes or townhouses, going for, maybe they say in the 4s, but most of them end up landing in the 5s
exactly.
for new construction. So you're getting
and that's not that affordable.
It's not that affordable. Relating to the median income and all in the area, sure, double income in a household for the most part could afford that, but not for first time home buyers.
No.
It's just not that market. So there really is nothing getting built in that 350 and below in this area.
Right.
Nothing at all.
And it's because it's not that feasible right now.
Exactly. So there's no way to increase that supply.
Right. And in the first-time home buyer market, especially if you want to be in the better school districts such as Downingtown, Westchester, Great Valleys, they're going to take a big hit too because they're going to be priced out. If they're trying to buy with a limited budget and someone's coming in and they're willing to pay cash, and waive inspections, or they have more of a down payment, it's going to be more difficult for first-time home buyers moving forward until some kind of slowdown or correction happens.
Yeah, and that can actually lead to more of the suburban sprawl because
right.
You have to just go a little further out to get what you want. And, we're seeing that with people moving further out towards Lancaster County. Lancaster County is doing very well as well.
Yeah,
but
absolutely.
It's just one of those things that if you're looking to buy and you can find something with the low rate, it's very appealing. So that's why there's such a high demand.
Right.
The problem is there's not a ton of inventory.
Not at all.
So we're saying the same thing over and over again. And if you've been looking, you already know this, so it's no news to you. But if you've been, kind of doubting and saying maybe I'll wait and just see if it gets better, if you want to be in this area, it might not really get that much better.
I don't think
anytime soon.
Right. What do you think about interest rates too? I know they're extremely low now, based on what's happening with the election, and I think based on what the Fed is doing. I personally believe that they'll probably go down. So in the next 6 to 12 months, I think they could actually go down a little more. I know the Fed said they didn't plan on raising any kind of interest until 2023,
Yeah.
which is crazy if you think about it.
Yeah, I mean, there's really not much return there on the lending side.
Right.
So, from my standpoint, I don't see things going down much if they do, but it is possible. I would think that we will, as soon as we start to see some true recovery in the economy, like, it's very cloudy out there, let's say, and the smoke hasn't really completely cleared. And once it does, if it looks like we're recovering quickly, then I could see the rates upticking a little bit. You're seeing uptick in commercial rates already.
Okay.
But that's more from a risk standpoint because they don't want to lend in risky categories.
So that's all that we have for you today. I hope you enjoyed our little rant about what is going on in the market and what we predict and think will happen in the next 6 to 12 to 18 months. So if you're thinking about buying or selling and you need some guidance around that, do me a favor, reach out to me at 267-808-0574. I look forward to speaking with you soon and have a great day. Take care.